Well, Goldman Sachs employees may be making more money this year. A Citigroup analyst says the investment firm's phenomenal results may result in a pay boost. Bloomberg's Christine Harper has more on this story. So it looks like Goldman, Christine, kind of caught between a rock and a hard place, between paying too much and paying too little at the end of this year. So what's Citigroup kind of saying all about this?
Yeah, well, what they're saying is Goldman's principles of compensation is that when they make more money, they pay more money to their employees, which most people might think sounds reasonable. The issue this year, of course, is that if they pay a lot of money, and they've been making a lot of money,
right,
it could make the public and government officials upset because of all the support that Goldman's received. So they have to sort of walk this fine line between paying an amount that's appropriate for their employees and not paying too much. So what the Citigroup analysts are saying after meeting with management is they expect more of the pay to be in stock,
right,
for it to be restricted for a longer time than it has in the past, and for it to be subject to clawbacks, so that if the trading doesn't work out in the long run, that it can be taken back from the employees who received them.
This is much of what we've been hearing or been pushing for like kind of the G20, correct?
Yes, it's actually eerie to me how similar how similar the Goldman compensation principles that were presented in May by Lloyd Blankfein are to what's been proposed by the government in the U.S. and also by the G20.
All right. So what about any of the new pay rules that are coming out from the G20? I mean, will it really impact them or no, because it's so similar already?
No, exactly. That's what I think. It seems like they kind of saw this coming and adapted already.
What are you saying?
Yeah, well, you know, they're very smart people at Goldman, and they sort of saw where the world was working, and they realized they had to do something. But what's good for them, and what it looks like the G20 is not going to set any caps, so Goldman will be able to pay as much as they want to. They just have to pay it in a way that doesn't encourage excessive risk taking.
So there will still be phenomenal payouts.
Yeah. I mean, if they make phenomenal amounts of money, there'll be phenomenal payouts. And there's a lot of speculation about whether there could be record pay at Goldman this year. They've already set aside in the first half a record amount.
Right. We know they've had record numbers. Let me ask you, though, I mean, Goldman the only winner in all of this, or not necessarily?
Well, it's going to be interesting to see. Goldman is certainly on the high end of what they're going to be able to pay their people, and they always have been, really,
right,
in recent years. There's going to be issues for Citi. On the other hand, they haven't been making a lot of money. Can they pay enough to keep their employees?
Right.
So that's the big difference.
What's the issue, I think, about that? I mean, about Goldman kind of having to pay enough to keep its employees. I mean, is that really, really an issue in this environment, and also, you know, being Goldman? I mean, do they really have to worry about that?
Well, I guess there's always employees that will find something else to do if they don't feel they're getting a fair shake, and that's a good question, Carol, because I think a lot of people do ask that. You know, they say, okay, you can make $10 million or whatever at Goldman. Where else are you going to make that? And
right,
I don't know if they always have a good answer to that. But you know, these guys they can go to hedge funds, they can go to start their own companies, they can do a lot of things.
That's true. Hey, Christine, thank you.
Thank you.
Bloomberg News' Christine Harper.